What's up, guys? Welcome to Gray Rabbit Finance. I am your host, Tyler, and this is part 3 of the Introduction to Ichimoku series. In this video, we will learn about Ichimoku wave theory and how to spot trending market signals with the Ichimoku 5 lines. Let's hop in. As you remember from the previous parts of this series, the main theories of Ichimoku include time theory, wave theory, and target price theory. Wave theory is the second out of 3 major theories of Ichimoku. Wave theory consists of 3 basic wave patterns, which include I waves, V waves, and N waves. These waves are the basis of the Ichimoku wave theory and will always be included in all of our wave counts. Now let's take a look at the basic shapes of each wave. The I wave is the foundation of all 3 wave patterns, and is essentially an impulse wave either down or up in direction on the chart. I want you to think of this I wave as one unit. If you put 2 of these I wave units together, you now have formed a V wave. V waves are usually one impulsive wave and one corrective wave back in the opposite direction. Now if you put 3 of these I wave units together, you get an N wave. The N waves usually consist of an impulsive leg, followed by a corrective leg, and then another impulsive leg in the same direction as the original impulsive leg. Now that you have a basic understanding of their shape and behavior, let's take a look at some in an actual chart. Okay guys, now I'm going to show you how to identify I waves, V waves, and N waves in both a bullish market and a bearish market. And so we're going to start here on this chart. It's US dollar and Japanese yen on the daily chart. And I'm just going to start drawing in these lines for you. So let's start with the I wave. So follow my cursor up. This impulse up here is the I wave. So we have an impulsive wave up. That's the I wave. Now, we have a corrective wave back down. Now we have the V wave. And now, simply, we have another impulse back up. And there you have it. That's an N wave. So you can notice that the I wave is one unit. 2 units of impulse waves are a V wave, and 3 units are an N wave. It's pretty simple, and I've turned off the Ichimoku indicator just so you guys can see the price action and focus on the waves. And now I'm going to show you the same exact thing but in a bearish market. Okay, so here we are, guys. We're going to do the exact same thing on a US dollar Japanese yen chart, but now it's just going to be in the bearish market direction. So watch me and follow my cursor as I draw in the first I wave. Boom, there's the first I wave. We have an impulse wave down. Now we're going to have a corrective wave back in the opposite direction to form the V wave. And now I'm going to draw in the next impulse wave down, and there you have it. Now we have a full N wave, and it's that simple. It's pretty easy, so there's not really much more to it than that. Okay guys, now to properly identify a trending market in the Ichimoku system, we need to wait for the following trend signals. These trend signals are called Senyaku Koten signals. Senyaku Koten means 3 positive signals in Japanese. And now I'm going to show you using the TradingView replay tool, the first signal, which is called a gold cross, and this happens between Tenkan-sen and Kijun-sen when they cross over each other. So let's hit the play button and see. Okay, right there. As you can see right here, we have a gold cross, right? And now that's the first signal. The second signal is the Chikou span crossing above the candles, and we have that signal here also. Now, the third signal we need is we need the price to break and close above the Kumo cloud. So let's take a look and see if it breaks. Boom, right there. Price has broken the Kumo cloud, and we now see a bullish Kumo forming here with the bullish Kumo twist. Let's continue to watch the price action and see what happens. Okay, now we see here, as the trend continues moving up, the Tenkan-sen will act as the first support line, and the Kijun-sen will start to act as a second support line. Let's continue further. Here's the Kijun-sen working as a second support line, as price comes very close to touching. As long as the price is above the Tenkan-sen, we should hold our position until the price crosses the Kijun-sen. At this moment, the momentum in the market has shifted, and price could continue back down. Right here. Now price has shifted back down to the Kijun-sen. At this moment, the momentum in the market has shifted and price could continue down further into the Kumo cloud. When price enters the Kumo cloud, I like to think of this like a plane flying into turbulence. We want to avoid taking positions while price is in the Kumo, and we want to wait for the price or the plane to come back out of the cloud. Okay, right there. Now we see that price was resisted at the Senko span A of the Kumo cloud. And now here's another example that I want to show you guys. Now if you take the recent high right here on this line, and you measure 52 periods back into time, on this line, and now you take the midpoint, the mid price between this candle, the lowest of this candle, and the highest of this candle, you see that right here we have the midpoint. And this is Senko span B, and this is actually showing us the middle price between those 2 points, which could also be a possible area of support for the price to bounce off of. And so this is just a real example of how the Senko span B is calculated. And I like to think of each line as like a soldier, right? And Senko span B is kind of like the final boss. So if price is crossing below Senko span B, you know, there's a huge momentum shift in the market, and price has just killed the final boss, and now it's going to continue going bearish, right? We know that the Tenkan-sen is like just a regular infantryman. It's a weaker soldier, right? It's the weakest soldier. And then we have the Kijun-sen, which is slightly stronger soldier. And then we have Senko span A, which is the next strongest soldier. And then we have Senko span B, which is the final boss. And that's how I kind of like to think about it. And it might sound a bit ridiculous, but you know, just go with me on this. Okay guys, so now that we know that the third soldier here, or the Senko span A, successfully resisted the price from passing through into the cloud, one thing I like to do is I like to do this thing called focus line. And so how do you draw a focus line? I like to draw it just from the recent high down here to where the Senko span B has gone flat. And now what this does is this just gives me a good idea of what the market's going to do and how the momentum is working. And this, for me, this could be a possible sign that we should start to look again for entering into the market. So I like to draw these focus lines here, and this kind of just gives me just an extra little tidbit of information to see when would be a good chance to enter. But as far as trading strategies go, we're going to go into that in more detail later on. But for right now, I just want you to understand how Senko span B is calculated, and I want you to understand how to find these trend signals, or the Senyoko Kyoten, in order to determine when the market's about to start trending. That's very important for the Ichimoku system. So, you know, getting these basics down are really going to help you with your trading in the future. Okay guys, now I'm going to show you the Senyoko Kyoten signals, or trend signals, but now going in the bearish direction. So let's use the chart replay again, and let's take a look. Okay, boom. So let me pause real quick. Here we see the death cross. This is called a death cross, and that's when the Kijun-sen crosses over the Tenkan-sen, which is the blue line and the green line. And then we also have the Chikou span here below the candles, which is our second signal that we talked about. And now we also have the price breaking below the Kumo, aka the final boss, like we talked about. and now we see a huge shift in momentum. Now, one thing to note, we have a bearish twist on the Kumo cloud. Now, this cloud is still too tiny to really be considered a trending market. And when the cloud is tiny like this, there can be a lot of fake outs and false signals. So we need to wait for the cloud to grow just a tad bit bigger into a stronger, thicker, a bigger cloud. So let's take a look at the replay and see what happens. Okay, now you see the cloud is starting to get a little bit thicker. Okay, now we've completed this N wave down, and now we have a healthy bearish trending market going down. I like to see this cloud has gotten a little more steam in it. It's getting thicker, so this is looking good. Let's take a look at the price action. Okay, we see the Tenkan Sen is acting as a support here. Okay, now the Kijun Sen is acting as a support. Okay, now look, now we have a gold cross, and now we have the Chikou span, which could potentially be coming back above the candles. So, you know, if we had any positions from before, we probably should have thought about exiting them once the Kijun Sen was broken. That could have been a good timing. But you know, we're going to go into more detail later on in the series about entry and exit timing and strategies with trading. So what I want you to know for now is just the 3 Sanyoku Kyoten signals, which are the death cross, which is right here, the Chikou span breaking below the candles, and the Kumo cloud and the price breaking below the Kumo, and then the bigger Kumo cloud forming. And that's pretty much it. Once you have those 3 signals, they're always at the beginning of every bearish trend and always at the beginning of every bullish trend. Yeah, it's pretty simple. Those are the 3 signals to remember. And like I said, we're going to be going into more detail in the series about more of the nuances of the cloud and all the different lines. But for now, just remember 3 signals, 3 positive signals or 3 negative signals. And that's the Sanyoku Kyoten, or the trend signals. Guys, this concludes part 3 of the Introduction to Ichimoku series. As always, I appreciate you being here until the end. If you like this content, please like and subscribe and feed that algorithm for me. I really appreciate that, and I appreciate you being here. Until next time, peace.